Good morning, everybody. Welcome to today's Morning Coffee with Mike. Today, we are talking about mastering the theory of buying and selling stocks. We're actually going through the questions that came in from the Trading Mindwheel Virtual Conference. We had over 1,000 people watch the conference live, and well, we got so many questions during the conference. So we answered a lot of them, but it was impossible for us to get to all of them. So I've curated a lot of the questions from the conference, and we're going to be answering those questions over the next few sessions. And of course, for you guys that are joining us live on the Morning Coffee with Mike show, we're going to answer your questions as well and go through some of the follow-up questions that you guys have. So one of the questions that came in was mastering the theory of buying and selling. How do you do it? So I had a few thoughts on this. The first thing that you would need to master the theory or the art of buying and selling is to first. Number one is to be clear on your objectives and to be clear on your intentions. So what are you trying to do? Are you trying to grow an IRA, a retirement account? Are you trying to grow your income? Or what exactly is it that you're trying to do? Be clear on your objectives because that's going to affect all this. That's the first thing. And clear on your intentions. Are you day trading? Are you swing trading? Are you intermediate term? Are you longer term? That's going to affect how you're going to buy and sell and when you're going to buy and sell too. So you're going to want to make sure that you have all of that outlined, written down, and actually do take the time to write those things down. Well, what's your objectives? What's your intentions? Because when you write it down, it's going to help to solidify it, make it more concrete, and also uh, give you more clarity about what exactly it is that you're trying to do. And when you're doing that, uh, well, one of the reasons why I struggled with that too, right? Like all these things, it's not where I just started doing it straight away. I struggled with all this, and one of the reasons why I struggled with writing down clear objectives and getting clear on intentions, like I felt like I would be pigeonholing myself into one thing, and not only that, it's just like, yeah, I kind of know what my objectives are, my intentions are. I don't want to waste time doing that. And I kept on running around in circles. I would make different mistakes and I would kind of trade by the seat of my pants, right? Like I didn't, I wasn't clear on exactly what I was going to do, and I didn't have clearly written rules to help guide me. So when I would make mistakes or veer off the plan that I had in my head, there was little to no accountability on any of that. So we want to be clear on our objectives, be clear on our intentions. That's the first thing that you would want to do when you're figuring out mastering buying and selling, and also how much risk you want to tolerate. That's another important part of mastering buying and selling. Like how much, answering that question, and how much risk you're willing to tolerate. How much of a drawdown are you willing to tolerate? If you're uh, someone, if you're someone like me, I don't have a very high risk tolerance relative to some other people. During the conference, we heard from a variety of different types of styles of traders. Some people were day traders. Some people were looking for the quicker gains. Other people on the opposite end of the spectrum were looking to hit those home runs and were willing to experience those bigger drawdowns. Jim Ropel, he's a hedge fund manager. He's doing much longer term uh, trading or intermediate term, so holding for several months, 6 months, a year, more than a year. And so in doing that, he's going to experience bigger drawdowns. You need to be clear on your intentions. There's many ways to skin the cat, as they say, and you could be successful with any one of them, but you need to know yourself first. So All that goes into the be clear on your objectives, be clear on your intentions bucket. Next, you want to narrow the field. And so here's what I mean by narrowing the field. None of us want to be trading everything. If we're trying to trade everything, then we're really trading nothing, or we're trading subpar. Well, we want to narrow the field. Well, we want to focus. So, how do we do that? We need to define our universe, and we need to define our setups. Now, if we did step one, like being clear on our objectives and our intentions, then we'll be able to better do step two. Because if I'm looking for growth and momentum in stocks that can really move, then that's going to help me figure out, well, what stocks should be inside my universe. And when I'm trying to figure out, well, what types of stocks can do this, then we could start to figure out the skill of factor modeling. I talk about factor modeling in my book, and let me see where the book actually is. I thought I had it sitting right here, but I don't. Let me grab another copy from the box here. Yeah, here it is. Trading Mindwheel. Go get it. It's on Amazon right now. Barnes and Noble, everywhere books are sold. But specifically, the about the skill for testing and why testing is so important. When we're trying to figure out factor modeling goes into the bucket of testing. Uh, if I'm looking for growth stocks and momentum stocks, stocks that can move very quickly, I could go back in history and take a look at the stocks that really moved the way that I want, that I'm interested in seeing these moves, and look at, well, what were the factors that this thing had? What were the fundamental factors? What were the technical factors? And I've gone back and I've done these studies, and the common factors that I've seen are extraordinary earnings, right? And I'm not just talking about some quarterly growth, but outstanding quarterly growth, at least 25% quarter over quarter. Many of them have 40, 50% quarter over quarter. Many of them have accelerating earnings growth quarter over quarter over quarter. Same thing with the sales. So, well, what's all that mean? It means that the company is making more and more money quarter over quarter over quarter, and it's rapidly growing. And that's going to push the stock price very quickly. So those are the types of stocks that I want to focus on. So I'll narrow my focus to just those. I'll run screens that only give me those types of stocks, and instantly I'm focusing on about 300 stocks rather than looking at the entire universe of stocks, which is about 10,000. Great. So I'm narrowing the universe, and you would need to define your universe too. If for whatever style you're trading, you need to define your universe with the types of stocks, or the types of setup, or the types of trades. With if you're a forex guy, or if you're uh, trading commodities or futures, or crypto, you want to define your universe. And then you're going to want to define the types of setups that you want to take. Um, again, this is going to be based on your studies. It's going to be based on factor modeling. And as far as setups go, something else to track is, how often does your setup appear? How often does your setup appear? Because that part, how often it appears, will factor into, well, how many opportunities do I have with this setup? And am I getting enough of them? Am I getting too many of them to trade? Very important question to ask, because that leads into what we said in step one, which was to be clear on our objectives. Last part here. Number three, we want to understand movement, right? Because go back to the original question, mastering the theory of buying and selling stocks, how to do it. Well, once we've got one and two down, we're clear on our objectives, and we're clear on our intentions. We have narrowed the field. Now we want to understand the movement, right? And what do I mean by understanding movement? I mean that we want to understand what's normal versus what's abnormal. what the best ones do versus everything else, because that's going to help us figure out how we should manage this thing, when we should cut losses, when we should raise our stops to break even and get that initial risk off the table, how far we should let this thing run before it starts to top out, what kind of signs, what kind of signals does this thing give us. All of that is all covered in the book too, and not just for my trading, but the theories behind all that and how you can develop these kinds of theories for yourself. Eh, and the theories for yourself, and also the mindsets that go into each one of the 8 essential skills for trading mastery. So go grab the Trading Mind Wheel. Um, that's those are my thoughts on the mastering the theory of buying and selling stocks. Let's see. Well, what questions you guys have? Oh, well, what follow-up questions do you guys have? What questions outside of that do you have? If you're watching on Facebook, LinkedIn, YouTube, Twitter, type into the chat. Let me know. Um, and I will start scrolling through Instagram here and see what questions popped up. See a lot of thank yous. How many of you guys came to the conference? I want to know how many of you came to the conference. How many of you have watched the replay? What do you guys think? All right, here's the first question that came in. Best pattern to trade intraday. That's going to go back to everything that we said earlier, right? So if we're clear on our objectives, clear on our intentions, so the objective, it, the if you're looking for a sideways pattern, it's going to be different than the person that's looking for a breakout strategy. So best pattern depends on what your objective is. For me, if I'm day trading, I'm still looking for breakout trades. I'm still looking for that same kind of momentum. So what I'm looking for is uh, one of the things that Mark Minervini spoke about during the conference. Mark Minervini is a 2-time U.S. investing champion. He wrote the forward on my book, and he's got a variety of books himself too. I recommend that you go and read all of his books, Mark Minervini. Uh, what he looks for is volatility contraction patterns. So he's looking for patterns where the price action contracts, and so does the volume. And what he says in his work is that you can think of it kind of like a towel, like a wet towel. Like you have a wet towel and there's a lot of water in it. It's kind of heavy. And then you wring out the towel and a bunch of water comes out. That would be like the first volatility contraction. Then you open up the towel again, and then you wring out some more water, right? You thought all the water was out, but then you wring it again and more water comes out of this thing. Then you see it the pattern tighten up a little bit more, a little bit less volume. And then you do that same process, maybe a third time, maybe a fourth time, however long it's going to go. But you start to see price narrowing and narrowing, and the volume dropping. That means that there's less supply coming to market, and uh, you're getting closer and closer to the optimal time to buy. It's one of the patterns that I look for, something that I look for in pretty much every stock that I'm going to trade. And it's also something else that I discuss right in here, the Trading Mind Wheel. Get it on Amazon. Let's see, what else do we have? What other questions? Okay, Kado, I'm doing well, man. How are you doing? Question from Lupfala. Do we trade every day? No, absolutely not. Definitely don't want to trade every single day. We want to trade when the opportunities present themselves, and uh, the A plus opportunities present themselves. Well, we don't want to be trading uh, C-level trades, right? We want to trade quality, the trades that will give us the best opportunity for success. Um, that goes back to the original conversation, right? Mastering buying and selling, defining our setups. We want to trade the setups that most clearly fit the definition, not just the base definition, but fit the definition of the ones that have been the top performers. So we want to trade when we see those. If some days there you might not find any. Um, my time frame, my personal time frame is swing trading. So I will hold stocks typically for about a month if they're uh, doing well, if they're doing what I want them to do. Uh, when I'm looking for stocks, I might go a few days, sometimes a week, without finding anything that I would consider high quality. In those cases, I sit on my hands and I wait. The clearer we are with our definitions, the easier that part is to do. Let's see. What other questions came in? See a couple of hearts coming in. Thank you guys. I appreciate that. How to withdraw money from TradingView? I know that you could set up your broker, some brokers through TradingView. Um, I I did that. I I tried testing it out with interactive brokers, setting it up on TradingView. I honestly, I just like to place the order directly with the broker, and once I do it that. Then I just close the broker, and I don't want to look at the broker. I don't want to look at my P&L or any of that stuff. The only time that I'm opening up the broker is when it's time for me to make some kind of an action. Otherwise, I just close the program. It's something that, well, over time it's become unnecessary, but it started out as something as a mindset hack, right? So that if I'm experiencing FOMO, or if I'm being influenced by somebody, it's just like, oh, well, let me go put on this trade. Then by the time it takes me to log into the broker and go and put something on, like it gives a little bit of time for a pause to uh, start to remember, hey, you should be following your rules. Well, what are you doing here? Uh, Now it's just a habit that I have. I don't keep it on, and I've got no problem following my rules at all. Good morning, Mark. See Mark watching over there on YouTube. Let's see what other questions you guys have. Just gonna scroll through Instagram here. Yeah, Mark, if you got a question over there on YouTube, type it in. Anybody else watching, type in your questions. Dr. Stocks, Eduardo, welcome, welcome. Good to see you, buddy. All right. Can I trade in Afghanistan? I would assume the answer is yes. I've never been, so I can't say based on personal experience, but um, if you're there, check it out. A couple of my favorite international broker, and one that many of our members use, is Interactive Brokers. We have members in UK. We have members in Canada. Well, we have a member that's in Australia, and I believe all those places you're able to use Interactive Brokers. So if I'm looking for an international broker that's also based in US, Interactive Brokers is the one that I would look at first. How can one become a good trader? Start out by reading the Trading Mind Wheel, right? And I'm not just saying that because I wrote the book. The reason why I wrote this book was because I wish that I had something like this when I was just starting out. Well, one of the big problems with So many of the books out there and don't get me wrong, there's a lot of great books out there. I wouldn't be where I am right now if it weren't for all the wonderful people that came before me. One of the challenging things that I found was that there's multiple skills that are required for trading mastery, and for the most part they're siloed. There'll be a book about there's a lot of books about analysis. There will be a book about trade management. There'll be a book about position sizing. You don't really hear a whole lot about journaling or testing or those kinds of things. Are kind of like footnotes, if they even mentioned. So I wanted to write a book about all these things, and of course, Mindset's the biggest theme of all, and to put it all together in one book, and with the central idea that mindset is not just about emotions and uh, psychology and that sort of thing, but mindset has everything to do with our beliefs, our belief systems, and yes, of course, our emotions and our habits too. If we become clearer on the beliefs that we have, as well as the beliefs that will uh, allow us to take the actions to get to where we want to go, then uh, it makes all this so much easier. And we have beliefs about everything, including each of the skills. Uh, Journaling, post analysis, back testing. Uh, Most people don't consider that stuff fun, and so they'll actively avoid it, or say that, or come up with reasons why it's unnecessary. I did too, and I struggled for a very long time because of it. And when my mindset shifted about each one of those things, that's when my performance improved. For that's why big part of why I wrote the book, and it's not just my experience, it's the experience of a lot of people too. Um, Many of the people that you heard from during the Trading Mindwheel Virtual Conference, many of the people that I coach. I also run a coaching program. I haven't even spoken about the coaching program uh, in the past couple of weeks because we've been so focused on the book. But if you wanted to check out the Mara Elite program, go to marawealth.com, and there's a button up at the top that says membership. It tells you everything about it. Um, See a couple more people joining in over on YouTube. Good morning, Jimmy. Good morning, Jimmy. We'll stay here for another moment or two answering some more questions. So I'm going through the questions over here on Instagram. Instagram seems to be pretty active. You guys over on Facebook, YouTube, LinkedIn, Twitter, get your questions in. I want to take some questions from you guys too. Scrolling down here to the bottom. Hello, Syed. Good morning. Here's a good question from Cat Lego Mad. Um, What's your take on stop losses? How do you know that your stop loss is perfectly placed? If it gets hit, how do you know that it's uh, instantly that the trade is not valid? Very, very good question. So, the first part that I want to answer is that um, the perfect spot doesn't really exist. Um, we can have better and better spots, but as far as perfection goes, um, perfect doesn't exist, and so therefore, if it doesn't exist, I think that it's a poor way to a poor standard to have, right? Well, we want to have great, but perfect. There is no perfect. God is perfect. That's it. So, how could we have a great stop loss? The way that we could have set a great stop losses for it, the part of what you alluded to is when you started to understand where the trade is no longer valid. That answer is going to be different for you. It'll be different for me. It'll be different from the next person. So, what invalidates the trade? I'll tell you some of the things that I look for in mine, and pick and choose from there what you want to take and what you don't. Just leave behind. So here's what I look for. Um, I start with a multi-time frame analysis. So when I'm looking for the setups that I take, I'll look at weekly charts, I'll look at daily charts, and I'll look at intraday charts. I'll go down to a 30-minute chart and see where I could find support and resistance, and I'll look for confluence across time frames. So if I'm finding a level that lines up on the weekly, on the daily, and on the 30-minute, I like that a lot. Um, that's generally a little bit more rare. Um, for the most part, I'll find confluence between the daily and the 30-minute. At least I want to at least have those in place. Great. Next, I'm looking at series of moving averages. The types of moving averages. Um, I like to use the primarily the 10 EMA and the 21 EMA, and even the 50-day moving average. I'll look at those, and if the support level uh, coincides with one of those moving averages or many of those moving averages, great. Then that's another confluence level, and it strengthens the stop placement, right? It's almost like we're building a floor. If it breaks through this and there's all these other confluences, then if it breaks through, then you know that there's something wrong, right? It's like if you're walking along your floor and then all of a sudden there's a hole and you fall through, that's a big problem, right? So that's what we want to think about when we start to build confluences around a stop. All the things that I'll look for Fibonacci retracement levels. I will look for anchored VWAPs around there. And yeah, some of these are uh, indicators are a bit more complicated. We won't have time to really go into the weeds on it here, but those are the kinds of things that we do go deep into the weeds on within the Mara Elite program. So if you heard about that thing, it's on marawealth.com. Go check out the Mara Elite program. Click the link at the top of the page. Let's see. Well, what other confluences are there? I think that's for the most part that's what I'm looking for. It's not a whole lot of things. Um, but the more confluences that we can have around it, the better. And I'm not adding additional confluences, right? Like, so let's say you're listening to the stream, and oh, Mike looks at uh, these moving averages. But let's just say that you've never looked at those moving averages before. I wouldn't start throwing in random variables into what I'm going to look at. If I start to look at something that I heard about and I start to use it, then great. You could use that as a confluence because now it's part of your study. But as far as throwing in random things here and there, that leads to all kinds of noise and their own challenges. It's far better to be consistent with whatever you're going to use. And it's from there that you'll start to pick up on the nuances of all these different indicators. Um, we are way over, so we'll wrap things up here. I want to say thank you all so much for being here with me today and watching. If you haven't gotten the Trading Mind Wheel yet, go get it. If you do have it, please leave a review on Amazon. So far, it has 2 5-star reviews. Thank you guys so much for that. And I will see you back here tomorrow at 9:30 a.m. Eastern Standard Time. Take care. Much love. Peace out, everybody.